Hello all, Bob Pisani. We are here at the Piper Sandler Global Exchange Conference. The heads of all the exchanges here to talk about how business is doing, how's trading doing, what does the SEC have to say, how's crypto doing? A lot of crypto people are here with us. But there's one legendary guy here that's with me right now. Howard Lutnick is the chairman and CEO of BGC Partners and a staple of CNBC for decades. As long as I've been here, you've been here.
True that.
Give us a thought just on the markets right now. We've had three major events this year. We've had the Russia-Ukraine war, we've had the Fed and inflation, we've had a lockdown in China, any one of which would have been a significant market event. But your thoughts on where the markets are right now and where you think we might be heading?
Okay, so inflation is sort of the driving force. So the Fed cannot break inflation unless the Fed funds rate is in excess of the inflation rate. That's the rule. It's a simple rule. So inflation running 4% now, 5% in that range, right? So you'd say, oh my gosh, does that mean Fed funds rates have to go above them? The answer is yes. People are projecting that the inflation rate's going to come down below 3%. And that means the Fed will stop at 2.75. So you're going to see the Fed funds rate, you're going to see rates go up to 2.75 by the end of the year. Is that enough? That's the risk. That's the comment. That's the change.
You seem to be implying that this is pretty risky. I mean, my heavens, the CPI was 8%. We're going to be 8.2 print on Friday probably with the May numbers. Even if we are at 5%, I mean, this is going to be implying much higher interest rates way down the road there.
Remember, CPI next year will have, they think oil won't be over 100, it'll be down to 85. So these are all projections. So they think inflation will come down below 3. If it doesn't come down below 3 next year, the Fed's going to start raising again. So that is serious risk of a gut punch. So if it all goes according to plan, inflation cuts down to the high 2s, and the Fed gets to 2.75, happy days. Yeah. But if inflation stays up and they start raising again second quarter next year, that's a gut punch for the markets. That's the big risk out there. And there's nothing you can do about it. You just got to wait and see.
The bigger concern is inflation stays embedded longer term. So just a broad concept, globalization and deglobalization. We saw globalization, it improved efficiency in supply chains, brought interest rates down, brought inflation down. Now we're getting, what do you call it, deglobalization that's going on? More supply chain issues. We're building new fabrication facilities in the United States. We're bringing in pharmaceutical plants into the United States. This implies less efficiency, perhaps higher interest rates. I'm asking a macro question now, but it disturbs me what you're saying here, because if we got to keep the Fed funds rate above the inflation rate, and we may have longer term inflation issues, I think deglobalization is a problem here. We could have much higher interest rates for many years down the road.
Well, the key is, I think the core structural inflation rate is going to come down in a lot of sectors. Energy will come down in a lot of sectors, but you're seeing the service sector is just not stopping, and everybody knows it. You know, finding employees and paying them a reasonable amount is getting harder and harder. So that service sector, housing price appreciation continues to rise. Rents are going to bump up because if people are making more money, they can charge more for rent. Mortgage rates going up. So I just think there's big risk in next year. Does the inflation rate come down? I don't think the supply chain issues, I think they're just going to get better, and we'll figure it all out and it'll get a little better. But in the end, you know, the risk is second quarter next year. Is the inflation rate starting to come down, and is 2.75 okay? We're going to get to 2.75. That's my bet. We're going to get to 2.75.
I know you're not a market prognosticator, but the viewers want to know, higher or lower on the S&P at the end of the year? Let's say we're at 4,000 on the S&P.
Bit lower.
Bit lower.
Because the Fed wants it to be lower. You have to realize they're going to raise rates and try to knock it down, because what can the Fed control, right? They can control, if they knock down the equity markets, people will feel poorer. If people feel poorer, they've knocked a good knock on inflation. So that's what they're trying to do. So it's not really bold to say they're going to be a little lower. If you ask the Fed and they told you the truth, they'd say, yeah, we want it to be a little lower.
Right, so the markets are holding up now because the bulls are trying this narrative that the Fed may actually pull off a soft landing, that all we have to do is show, right now we've got peak inflation, it's going to start dropping, that'll be enough, the Fed is going to somehow magically stop it. You know,
Exactly.
2 3/4 to 3%. This seems like a lot of hopium to me, but is there a chance? Historically, the Fed has not really succeeded in soft landings. They've had more recessions induced than soft landings created.
Correct. So the world showed us that an inverted yield curve, when the 10-year note has got a lower yield than the 2-year note, that means a recession's coming. It was like that in April, sort of stopped in May. So the world is thinking, they got a chance. It's all about, does service level inflation slow down? And right now, geez, I haven't seen it. Everybody I know is looking for more money. Everybody in the service sector is looking
What
for more
about
money.
BGC? What are you doing to keep people?
Well, you know, my front office people are not, that's not them. They get paid on a percentage of what they bring in. So that's not their issue. But yeah, I mean, the legal world, everybody's paying lawyers more money. Everybody's paying service people more money. That's the way the world is. I've got to keep up with it. But fortunately for us, we can use efficiency, automate things, offshore things. You know, we can mitigate it by doing a good job for our shareholders in the company. So I'm not sweating
Your
those
point
details.
is all these people asking for more money, and what you're really doing is you're creating, you're bringing in more software that makes things more efficient, and eventually that will mitigate these demands for more money. Eventually.
Sure, some people get more money, but then, of course, if you can make it more efficient, I mean, I think over the long term, a year or two, it's going to wash its way out for us. We won't feel it the same way other people will.
And interest rates, I asked you about the markets, you think a little lower. Interest rates by the end of the year, the 10-year mortgage rates, higher, lower?
I think they bet on 275 right now. I think the market's betting on 275. I think that's sort of a reasonable place at the end of the year. I don't think the Fed's going to take a new rethink.
275 for the Fed funds rate.
Fed funds rate.
What about the 10-year? We're 3%.
It's all there. That means it's all betting on exactly that right now. So the question is, does that hold? And that you won't know until the end of the second quarter when we look at inflation. They're going to wait 2 quarters, see how it goes. Come like this time next year, and, you know, if inflation's still up, got punch coming.
Yeah. Crypto. We've had a bunch of crypto people here. They're muscling into this conference, folks. They've been trying for the last few years. Mike Novogratz was here. Vlad Tenev from Robinhood was here. They're a little more humble this year after the markets mess.
I mean, Mike Novogratz got that tattoo from Luna that's worth zero.
He had
That's a
some
challenge.
very interesting things to say. Let's split between blockchain and Bitcoin. Let's leave out Bitcoin for the moment. The concept of blockchain. Novogratz does have a point that this is an exciting technology. Are we going to see it mature? Are you optimistic or pessimistic on the development? Let's just say a blockchain, decentralized finance concepts.
I think blockchain will have fundamental value, clearing transactions, settling transactions. Just before we started, we were chatting about title insurance. I mean, there's a whole bunch of uses of proof of ownership that blockchain will matter. DeFi, I mean, let's just deconstruct DeFi for a minute. It's funny. I write some software, okay? And then I say that software is going to be decentralized and it's autonomous. And then someone calls me up and says, Howard, you made a mistake. And I say, oh, let me fix it. Really? How did that become DeFi? There's no such thing as DeFi. Software is not writing itself. It's not out there. We know the name, Ethereum, Joe Lubin, right? How is Ethereum DeFi? Joe Lubin, you can call him up. He says, I'm going to fix this. So the answer is only Bitcoin is the only one that actually has never changed itself. If it's broken, it's broken. But it's the only one. So if you were going to bet on one crypto, you would bet on Bitcoin because it's the only one that doesn't have an owner messing with it.
But there have been others have had forks. They've had all sorts of things that have happened where they've reached limits. They've decided to split.
Right. Those are all changes. There's no such thing as DeFi. Like, I don't buy DeFi. I'm a finance expert. If you tell me what the DeFi is, I'll explain what the name is in regular fi. Okay. And then I become a quick expert in it. So I like blockchain. I think it's interesting. Bitcoin is the only one that's really, really interesting. I think there are stable coins like Luna and Terra that were nonsense.
The problem with Bitcoin is there's no intrinsic value. What's the use case? Is it really is it a store of value? Really? Is it a means of payment? I don't think it satisfies.
I don't think it's about America. I think it's not about America. I mean, think about this. When I went to Argentina, right? If you paid with cash, it was half the cost than if you used the official exchange rate that was a credit card. So everybody would exchange their money, and pay in cash. And my wife would carry around a beach bag full of cash to pay for dinner because it was half the price. Now people walk around and use Tether. They use Tether, and they use Tether to pay for it in lieu of doing that. So in countries like Turkey, in countries which have Russia and China, these places need stablecoin and they need Bitcoin because they don't like the core currency. Us? Why is it interesting in America? It's just Americans messing around with Bitcoin. We're just messing around like Tesla stock.
So if you think your currency is useless, then obviously a cryptocurrency has some value.
Correct. Who was the #1 miner in the world? China. Who was the #2 miner in the world? Russia. Duh. It's not going to be America.
People
what does
are
Americans
concerned about
need
the value of their currency.
Yeah.
Let me ask you about electronic exchanges. You've got some interesting projects coming up here. Tell us about it.
So we built an electronic treasury marketplace to compete with the Chicago Mercantile Exchange. So the Chicago Mercantile Exchange, worth $80 billion, one of the great monopoly exchanges in America. It's fantastic, worth $80 billion. Right. Well, it has cash treasuries and it has futures. It's amazing. So what we've done is we built a treasury electronic business to compete with an electronic exchange. We took 20% market share off of them. Fantastic. Now what we're doing is we're creating a full futures exchange on interest rates. We're going to bring in banks and market makers, and we're going to set up a competitor that's coming at the end of the year.
A competitor to the CME.
And that is huge. So that's in BGC.
CME is, the powerhouse in the futures business.
The rock star. So if they're worth 80, here's the way I say it. If they're worth 80 billion and we build a nice competitor that's only worth 8
Why hasn't there been other competitors that have seriously...
You need two things. You need a rocking front-end electronic system already connected to everybody. And you need cross-margining. You need to cross-margin. And the CME won't let you cross-margin to them under any circumstance. So what we did is we brought in the London Clearinghouse, who has the largest holding of interest rate swap collateral in the world, so you can cross-margin to that. And so that is the only time it's ever been done. We have a rockin' front-end system that already has 20% in US Treasuries. So that's connected to all the rates people. I've got the LCH as our partner. We're gonna have cross-margining to them. And for the first time ever, all the pieces are in place to create a competitor.
Yeah.
And all the banks, I think the banks will be partners. Yeah. The banks will be our partners. And this is gonna be exciting. And look, if we're worth 10% of them, that's worth 8 billion. And our market cap is only 1.6 billion. If you have 20%, it's 16 billion. They'll always be the greatest, the biggest. I'll always say how wonderful you are. But if we're worth, 8, 16 billion, come on, that's pretty good.
A pleasure to see you. I know you got to go and speak at this conference here in the next few minutes. Howard Lutnick is the chairman and the CEO of BGC Partners and an old friend for CNBC. Howard, thanks very much.
Great for being here.
Thank you for joining us.